What's up, people? Just want to let you know this video is coming from me with love, as most of my videos have, and the entire reason that I still do what I do. Now, these last 4 or 5 days, or let's just go back to, let's say, November, from the last time we had a sell-off, and then we had maybe one or two since then. Sure, January started out shaky. We had that 1 or 2 days in February that were pretty bad. But putting that aside, and the fact that the market's come roaring back and when everything's at all-time highs, there were a few stocks that were ignoring the market anyway. Companies that were already going down, or stocks like Tesla that doesn't care about the market. Again, I'm jumping ahead way too much right now. What I wanted to say today in this video, and I made a video earlier and I really just became long-winded. I can do that, and I started into rants and I lost focus on the main point. What I wanted to do is tell you is that I'm done. I'm done trading. Okay, the environment right now, as great as the market is, this is not a trading market. Trading market is when you have volatility. You could get in and you could, with some hope, that you could actually sell a stock and buy it when it pulls back. We are now in a market where, as a trader, and I know a lot of you like to go home 100% cash, and if that's your prerogative, still this does pertain to you. But this is a market right now where, instead of buying, let's say if your average trade is maybe 1,000 shares, instead of trading 1,000 shares and trying to make that quick 15 or 20 cents, why not just buy 300 shares and never sell? Because that's the environment we're in. Over the last 3 weeks, I've been talking about a company, the electric car company of China, the Tesla of China, if you will, named Kandi. K-N-D-I is the symbol. Now, here's a stock that we started buying at 9, 10, 11, 12, all the way up to 15. And we got all excited when it broke 15. And we had the $15 options. We wound up losing on those because they expired as the stock went back below 15. Then, of course, right after options expiration, the stock gapped up on some government subsidy announcement. Whether it be real or not real, whether this is a real car company or not, obviously everything in China you have to be a little skeptical about. But if you do some homework on this company, the reason I became an investor, and that's a lot to say for me, because usually I don't hold on to stocks. I've owned a few stocks for more than 6 months or a year. Diamond Foods, DMND. I owned Tesla for like 6 months and still wound up missing 100 points out of it, or now 150, or basically, yeah. Again, jumping around way too much. I want to stay focused here, even though it's hard for me. I'm done. I'm done trading. But that doesn't mean that I'm done teaching and educating you. Because I'm in a place where I can now sit with my Kandi, with my GoGo, with my dry ships, with my Alcoa, with my Diamond Foods, and of course with the QQQ. And I can just sit back because I'm pretty certain where all those stocks are going. And again, if I'm wrong and I get stopped out, like somebody on StockTwits just said, they wanted to bet that I would get stopped out of dry ships somewhere over the next month, kind of thinking that you might be wrong about that, considering the stock just broke over 4 and my stop is at 323. And again, if I get stopped out finally at 323, my cost average is 285, so be it. If it goes back under 323, chances are it's going to 285 and then maybe 250, and we get to do it all over again. But all my stocks right now, trading, as some of my videos are titled, trading, day trading, in fact, has ruined my life. Because if I'm going to sit here, okay, and over the last 5 or 6 days, and I've been talking about Kandi going to $35 and $50, and now my new price target is $343. Huh? What? If I told you that a stock had a chance to go to 30 bucks at 18, in this market, you're kind of like, all right, whatever. But if I say it's going to go to 343, then people are like, what? What are you talking about? Because when I made those same kind of outlandish recommendations on Tesla and First Solar when it was at 12 bucks, and GMCR when that was breaking under 20 in the aftermarket about a year and a half ago, and Deckers, everybody thought my predictions were crazy. All I said, if they could just turn around and break these resistance levels, we got some air pockets and these things could go right back, and obviously they all went. I know it's probably not going to go to $343, but doesn't it feel a lot better owning a stock that if you look at it, rational thought says you shouldn't buy this thing. It was 3 and change, then 5, then 8, then 9, then 15, pulled back to 11, and now it's just rocketed up to 20. Why would you want to buy a stock that was $11 3 weeks ago that's trading at $20, $21 right now? Exactly. Why would you? So what are your choices here? Ignore it and hope it goes down to a price where you feel comfortable buying, or what we've been doing is just buying a little bit, so in case it never comes back down, at least we have some. And this is the part where day trading has ruined my life, because I started buying the stock back when it held at 1090, got 11, 12, 13, 14. Next thing you know, spikes, comes down, spikes, comes down. If you've been watching this chart on a daily basis, there's always this moment where Condi looks like it's just going to actually reverse and break the trend. And you know who's been selling it every time on that move? This guy. This guy. I think when it hit 17, I wound up selling it at 16. I think when it hit 18, I wound up selling it at 17. I think when it hit 19, I wound up selling it at 18. It's unbelievable. There is no point in trading this market. But there is one reason. And the reason I got into trading in the first place was to short stocks. I figured the majority of people own stocks. And the market goes up, everybody's happy. Every genius, every analyst, every guy you talk to, if the market's going up, most of the time everyone's going to be right. I wanted to be the guy that was right when everybody else was not doing well. And the only way you can do that is if you're shorting stocks while they're going down, while most people own them. At least I know how to hedge, and I know how to short, and I know how to manage a portfolio. And I thought, that's what I want to do. So basically, I started trading to short against positions that I owned, because I owned stocks from when I was a kid. I've been in the market since I was 13, 14 years old. When I was trading in 98, 99, 2000, it was mostly against my portfolio of stocks. You know, if they were going down, I was shorting them that day against what I owned, and I would make money on the pullbacks. So when they would rebound, it was twice as good. Anyway, but right now we're in a market where there's really no reason to day trade this market, when what you're going to wind up doing is just buying the same stocks that you just sold yesterday, higher price tomorrow. Why not just take smaller size and hang on to some names? Put your stops out there in case we start going down. And I know if the market opens up down 50% tomorrow on a nuclear catastrophe, we're all screwed, right? That's your fear. You don't want to stay in any stocks overnight. Now, I'm not saying put your entire nest egg into these stocks, but at this point, you need to own. You need to own at least the QQQ. All right, so here's where we're at. Been doing this for my whole life, pretty much, right? I was just an independent trader. I had part ownership of a firm at one point, and I was the guy that became the instructor. New guys wanted to learn how to trade. I showed them how to get started. I showed them 4 or 5 things that they should follow. I gave them a couple of tricks of the trade, so to speak, and then I gave them a list of 100 things that they shouldn't do. Because in this business, trading, investing, there's 4, 5 things that you should concentrate on, and about 100 things that could deter you. Money management, too much risk, over trading, churning your account, knowing when to trade, that kind of thing. Thin stocks, thick stocks, million things that you could do wrong. Holding overnights, letting something go against you, not using stops when you shouldn't use stops. Millions of things that are there that you should learn what not to do. What to do, I could give you 3 things you could probably make a living on. And that's what this video is all about right now. I do not want to do a broadcast anymore. Okay? I used to like trading live in front of people, and I still do, but I used to like doing it all day. There's always something to talk about. I always tried to keep people engaged. This is what it is right now. And most of the guys in my room, we've had, right now, in the last 2 years, 1,200 people have come through the doors of the Hit the Bid broadcast. We've got about 70 members out of those 1,200 that come and go. They've paid some lifetime subscriptions. Some guys have paid for 1 or 2 months, and I welcome people back. Sometimes they forget whether they had a good time or not had a good time. Bottom line, what I'm trying to say is most of the guys in the room have either paid for 6 months, 1 year, or a lifetime subscription. Now, if I said you could have access to a guy that's been trading 20 years, that took a $35,000 account and turned it into over $1 million in 18 months, then lost all that money and then was able to bring it all back again, because that's the kind of life that I've led. I've burned out twice and I've made it all back. I'm still in the process of making, I'm still not at my peak because of some of the debacles that I've had shorting the market in 2010 and middle of 2011. I've taken some big hits, but I've been able to overcome them because generally on a daily basis I can make money. It's just that I had a little bit of a gambling problem, and each time I thought the market was going down, I would go 200, 300 times. And I'm talking about if I was doing 20, 30 contracts, I'm buying 200, 300, 500, 1,000 contracts, because I figured if the market was going to go down, it was probably only going to be short-lived, so I might as well load up, make money for those couple of days, and then move on. But it was always that one extra day that I stuck around and I blow the whole trade. I don't do that anymore. Now, all you got to do is buy stocks when they're breaking the previous day's high. Again, straying from the path. If you're out there and you're thinking about trading, wouldn't you pay a guy $2,000 to have have him in your corner while you're learning how to trade? Maybe you've paid for an education class. Maybe you've paid for books. Maybe you have a website that gives you recommendations. What we do at Hit the Bid is on the fly, I'm trading. And as I'm getting into a trade, I'm explaining why I like this trade. And generally, every time I like an idea, it's because of the same reasons. So in using those examples over and over again, you're in fact learning what to look for yourself. And as each different situation appears, I explain what this situation is, why it works, and what could happen and how we could benefit. And then even when trades look good, and I think it's one of those kind of trades where it's like almost like you're getting set up, and I say, here, this is one of those trades where it might look good, but let's take a look what it does first and see if it breaks this level right here. Why not just wait? Good way of learning is I'd rather be late and right than early and wrong. I'd rather wait for the move to start and get involved somewhere in the middle, make them meet in the middle, because you don't have to be the first guy in, because the first guy in, you never know if it's going to go your way. You certainly don't want to be the last guy in, but if you're in the middle there, and you can make some money. Again, let's bring it home again, because I know I've ranted a little bit too much than I even wanted to. If you want to learn how to trade, would you pay $2,000 to hang out with a guy for the next 18 months? He has your back. He's going to teach you how to trade. He's going to give you some information. And I haven't even mentioned the best part. He's going to let you know what he's trading. So if you're involved with the stocks that he's involved in, and he's making money, then you're going to make money too. So we've had 5 or 6 guys come in and take the $5,000 challenge. I said, let's put $5,000 in an account, sit in my chat room, and let's see if I can make you money. So far, these guys are doing pretty well. One guy was doing extremely well, and then he took a couple of hits, but he's made it all back. He's up to about 10 grand in his account right now, thanks to Condi, thanks to GoGo Today, owning the QQQ calls, as well as Dry Ships, DMND, and now it's just, I want you guys to be in the same boat as I'm in. I want you to have a little money in the market, and then every day from 9:30 to about 11:30 or 12 o'clock, I'll show you 2 or 3 good ideas that you could make some money for the day, and then just go back to being an investor until something changes again. Because right now, I mean, we were joking around about how long would it take for the Ukraine incident to be a non-event? And it was 12 hours later, and we don't care about it at all because the government owns the stock market, and it's going higher because there's nowhere else to put your money. Interest rates are 0, and all you got to do is sit around and wait. 90% of stocks are going up. This is the greatest environment ever. Join me. Join me. I'll give you a free month. You hang out. If you don't like what I'm doing in over a month, because it takes a month to get to know me, we'll part as friends. See ya.